please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
102, 106, 110. That's where the markets opened. 10,235 thereabouts. That's a 1.1% gain. Likewise for the Sensex, that's a 350 up at 33,385.
With this kind of strength and the up move and the breadth, I think the drift should be more on the upside in the next coming few days.
Status quo is what it is as far as the rate is concerned. So the repo rate has been kept unchanged at 6%. That's the first news that we have, which actually is on the unexpected lines.
Given the unsettled global environment, however, the MPC emphasized the importance of strengthening domestic macroeconomic fundamentals, persevering with deleveraging of distressed corporate sectors, rebuilding of bank balance sheets, and the deepening of risk-sharing markets.
What you had today is a massive macro move on the bond market. So that's one piece of the puzzle, of course. The other piece of the puzzle is the global equation. You don't know how that's going to pan out, but the last 2 days have been quite good for the US market, and today you didn't have most of the Asian markets trade. So once they come back, they are likely to react positively. So for tomorrow, at least first half, it looks like things could still continue to be on the upside.
Markets claw back after yesterday's losses thanks to positive global and local cues. Bank stocks rally in late trade after the Reserve Bank of India's policy as bond yields soften.
Metal stocks perform well in trade. The Nifty Metal Index ends the day 4% in the green, led by Hindalco, JSW Steel and Tata Steel.
Monetary Policy Committee, the MPC, votes 5-1 in favour of a status quo policy. All rates kept unchanged. They expect growth to hit 7.4% this financial year and predicts inflation to cool down to 4.4% in the second half of this financial year.
Broader markets surge in tandem with key indices. Mid-cap index ends the day 2% in the green, led by mid-cap banking stocks.
And the Supreme Court refuses to stay Dalmia Bharat's plea to stop the out-of-court settlement in the Binani Cements case. Lenders are yet to finalize a buyer for the debt-ridden Binani Cements. Those were the top 5 headlines from the day's trading action, and what a spectacular action-packed day we've had. Almost you can split it right in between in 2 halves. Hello and welcome to a fresh new edition of Markets Today Talk Back, the show where we tell you about 8 hours of trading pretty much in just 5 stories. I'm Prashant Nair. With me is my colleague Ekta Batra. Ekta, hi.
Hi Prashant, absolutely. It was strength to strength for the markets today, but over the next 30 minutes, that's exactly what we'll be doing. We'll be discussing the top 5 market headlines, and our experts will be answering all of your stock queries as well. Joining us this evening to discuss all of this is Angel Broking's Mayuresh Joshi and technical expert Ashwini Gujral. Thank you, gentlemen, for joining in on the show. Before we get to you and start discussing some queries, Prashant, it turned out to be a fabulous day for us, courtesy the global markets and then courtesy RBI.
You know, and the crazy thing is that we started on the Nifty with a 100-point gain, exactly a 100-point gain. And that's, you know, what I'm going to do essentially is split the day in half. I mean, not exactly in half, but let's look at the key indices, the Nifty, I mean, the Bank Nifty, the PSU Bank Index, the Metal Index, with the gains that they started with, and essentially the gains that we closed with. So, you know, it basically will tell you that in all cases, in all these indices, markets had essentially a doubling of the move, doubling of the gains that they actually began with at 9:15 today. So the Nifty on your screen started 100 points higher, and we closed another 100 points on top of that. So 200-point gain. You look at the Nifty Bank, 265 points higher in terms of opening gains. We ended with 2.5 times that, so 665 points by close. Look at the PSU Bank Index, 60 points higher, cap up. We end with about 158. So that's basically 3 times from the gains that we started with. And you look at the Nifty Metal Index, which was essentially the top sectoral index gainer. I mean, actually the PSU, after the PSU Bank Index, that was up 68 points at start, and by close it was up 135 points. So, you know, it's instructive to note that this was opening high. I mean, if people got in at that point, you basically even doubled gains from there, more than doubled, in some cases 3 times those gains. So what were the factors? great overnight cues. I mean, that big recovery that we saw, the S&P was down 2% as New York started. By close, was down 2%. We ended up almost 1.5% higher. European stocks, by the way, I mean, as we speak, they're up between 1.5% to 2%. So there has been no let-off in that global move. Mind you, trade concerns are still there. I mean, it's not as if that's gone away. But I think increasingly people have come around to the view that maybe this is going to get settled finally with compromise and yes, a negotiation. This is not going to be an all-out trade war. At least both China and US officials have said that repeatedly. One Chinese official actually came out and said early in Asia that we don't want a trade war because history shows us there are no winners out of one. And of course, then there was the RBI policy, which was seen as extremely dovish. And Ekta, I mean, you were on the closing hour. The market didn't immediately react. I mean, bank stocks didn't go gangbusters as soon as the RBI policy announced, or even a little while after. It was only, I think, post 3 that stocks really took off.
Yes, absolutely. I think it was the commentary was slowly sifted through, and also through the commentary of the RBI governor. That's when we started seeing that sort of softening which came in on the bond yields as well as for the bank Nifty. But all in all, it was definitely a very, very positive commentary when it came to inflation targets. But it's important to note that despite the inflation targets being lower for FY19 for the first half as well as for the second half, the RBI has mentioned that the upside risks do remain. A lot of stocks which rallied: State Bank of India, ICICI Bank, Canara, Bank of India, Ujjivan. Those were really the stars in today's trading session. Let's find out what our guests in fact make of today's trade. First up, Ashwini, I want to come to you because we ended close to the high point of the day today for the Nifty. What kind of follow-through do you want to see tomorrow which will provide conviction?
See, first of all, if you hadn't seen that crash yesterday, you would not have gotten this sort of a rally. The other thing is that you were able to make money post the open also because there were such massive shorts. And in the last half an hour, you had the Bank Nifty expiry. So, on a different day, in a different market, all this news may not have mattered as much. Today, the market was looking at covering shorts, and it used every news flow to, take the market higher. Now, follow through sometimes does not happen to such moves because the very next day, you get into a bit of a sideways type of move. But overall, the 200-point move and the move on the Bank Nifty has taken out a lot of shorts from the system, and chances are that slowly the market is building a base which will move higher. For the next 3 or 4 sessions, I think PSU banks could have a very good time. So on declines now, the market is clearly buy on dip, but at any point we should be ready for a certain tweet here or there, or some news flow on trade war, and all hell breaks loose again. So the most important point was shorts from yesterday propelled today's rally, and you may not have a similar rally maybe tomorrow or in the days to come.
But Ashwini, on the Nifty, I mean, if you're carrying longs, stay long. That's the advice.
I would think so, because today we've crossed that 10,300, 350 type of zone. And now the next target is the previous intermediate high of about 10,500, 550. So another 200 points still to go.
Okay. All right. Well, let's get to the second headline of the day now. We have metal stocks, which were really the star performers in today's trade. The Nifty Metal Index itself was up 4%, led by stocks such as Hindalco, JSW Steel and Tata Steel, which were all up anywhere between 3 to 6% odd. We have a query coming in on this. Our viewer Junaid K from Hyderabad has sent us a question on Vedanta, 1,000 shares which he bought at 201, and he's been holding them for 1.5 years. He's a long-term investor. Should he hold or sell? Well, Mayuresh, what would you recommend?
Evening, Ekta. Again, I think out of the entire metals pack, Vedanta is one stock that we would still continue to prefer over the longer period of time. The different subsets, specifically the zinc business, is expected to do well, and you're not seeing a lot of volatility in terms of zinc realizations, at least at this point of time. So all the rhetoric related to trade wars and what you probably saw in terms of price realizations for a lot of metals, including aluminium, steel, probably coming down in terms of LME prices. Zinc has largely stabilized. So I think zinc business should hold on, both in terms of supply still remaining patchy and realization is expected to remain strong. The aluminium part of the business is somewhere where the realizations, at least for Q4, can be a little bit patchy. But going forward, with a lot of mines expected to come through and the integration coming through with mines that are expected to be commercialized, can be a big winner for Vedanta. The oil and gas business, again, I think the kind of capex that they've done and the optimization, again, the cost of production is far lower at this point of time. So apart from the caveat of the PSE, which is the contract with the government at this point of time, the oil and gas business should also contribute along with the healthy balance sheet that it carries. So yes, I think maintain my positive view. The investor can clearly hold on to the stock.
Okay, we got another question in the metal space. Our viewer Savio B from Mumbai has sent us a question on JSW Steel. He's got 1,000 shares, which he's bought at 270 rupees a share. He's been holding for the last 3 months and is a medium-term investor. He wants to know whether he should hold or sell. I mean, actually, he's been holding for 3 months, but JSW, 10 days back was at about 270. It's crossed 300 now, close to 310. Ashwini, what would you tell him?
See, anybody who's in metals should understand that, commodities are best bought when companies are going bankrupt. At 200, Tata Steel was great. Now here, you have trading rallies. So maybe, if you are buying at 270, take some money off at 320, again wait for a dip, again buy, say around 280 thereabouts. So you'll have to trade ranges. I don't think metals is quite in a similar sort of trend that it has been for the last couple of years. So I think trading rallies of 10 to 15% should make you book some profits.
Even in terms of trading, Ashwini, in that space, which is the best stock to go long? Steel, non-steel?
See, a lot of stocks, Tata Steel, Vedanta, etc., have broken their 200-day moving averages. JSW Steel has not done that. So in that sense, this is probably the best stock. But overall, the day, these guys are moving, they generally tend to move in synchronously. I think JSPL has also not broken its 200-day moving average. So even there, buying can be done. But Hindalco, Tata Steel, Vedanta, they're all fairly weak stocks now.
Okay, well, let's get to our third headline for the day. The Monetary Policy Committee has made the first monetary policy announcement for the new fiscal FY19. It left the repo rate unchanged at 6%. The decision was on expected lines. However, it sprung a positive surprise, striking a dovish note on the inflation front. However, the panel added that risks to inflation were tilted to the upside on the growth front. The Monetary Policy Panel has predicted a GDP growth of 7.4% for the current fiscal, but for the bank stocks, they rallied in the last hour as the RBI deferred INDAS implementation by 1 year as well. Let's listen in to the RBI Governor, Urjit Patel himself.
Inflation prints for February did turn out to be softer than our projection. Much of this is because of the seasonal softening of the prices of vegetables that occurs during the winter months. However, the MPC looks ahead, and we noted that there are several uncertainties around the baseline inflation path, which is why we kept the stance neutral and the rate unchanged. The committee observed that growth has been recovering in an environment characterized by a pickup in credit offtake and large mobilization of resources from the primary capital market, which should support investment activity going forward. In its judgment, India's long-term growth potential is expected to be reinforced by various structural reforms that have taken place. Given the unsettled global environment, however, the MPC emphasized the importance of strengthening domestic macroeconomic fundamentals, persevering with deleveraging of distressed corporate sectors, rebuilding of bank balance sheets, and the deepening of risk-sharing markets.
Okay, in fact, Lata Venkatesh is now with us with her analysis of the RBI's policy decision.
Well, as expected, no changes in rates, but as we were always saying, what we need to watch out for are the growth and inflation projections, and more inflation rather than growth. The inflation projections for the first half, the quarter that's going on, has been brought down by half a percentage point, 50 basis points. The original estimate was 5.1 to 5.6. It's been brought down to 4.7 to 5.1. That's the most dovish signal ever. For the second half, it has been brought down from 4.5 to 4.6 to 4.4. So, if the RBI didn't choose to hike rates when it had an inflation forecast of 5.5 and 4.5, why will it hike rates when it sees the inflation down to 4.4 up until March 2019? So till the elections, we definitely don't have a rate hike, and that explains the big move in bond markets, that is the yields crashing, as well as the positivity in the bank Nifty and in banking stocks. That's absolutely the most important takeaway. The second takeaway is no explanation has been given as to why inflation has been marked down so much. Of course, the governor said that they are data dependent, and so it's quite possible that if the MSP or if the fiscal deficit were to come way out of whack, or crude were to come way out of whack, then obviously this will get revised. But for the moment, I think you can rest assured that you have something great going on in the bond markets and in banking stocks. The second important thing is what is not there in the policy or in the accompanying developmental regulations. There is no tweak in the NPA rules, and there is no mention of higher limits for FPI, but nothing prevents the Reserve Bank from bringing both these very soon. The other probably positive for public sector banks, in fact for all banks, is indices has gotten postponed by 1 year. That would be a little bit of a relief. So all told, extremely positive for bank stocks and bond markets, but let us see if data obliges the way the Reserve Bank expects it to move.
Okay, we got a question from Venkatachalam, who wants to buy Yes Bank. He's a long-term investor, and he wants to put in 3 lakh rupees into Yes Bank. At what level should he do this, is his question. First of all, let's ask Mayuresh whether one should. Mayuresh, your view on Yes Bank?
So, Prashant, positive view again, and what probably transpired a couple of quarters back in terms of the divergence with the RBI, elevated NPAs, elevated credit costs, it should largely be behind the bank at this point of time. Going ahead again, the expectations of the provisioning coverage ratio improving, along with what you've probably seen in terms of topping off in terms of credit costs, along with stability achieved in GNPAs and net NPAs, should give that respite on NIMs and spreads. So a large element in terms of them building their CASA book, and specifically in terms of their advances remaining extremely strong at 25-30%, with good capital adequacy, at least at this point of time, to suffice for the next few quarters, it should hold the bank in good stead, both from an ROA and ROE perspective. So declines in a staggered way is something that I'll put forth the argument for the investor to invest in this stock, but I remain very, very positive.
Straight to the fourth headline of the day, the broader markets performed well in trade today. The mid-cap index was in tune with the key indices, ended the day 2% in the green, led by mid-cap bank stocks and a few others. We have a query coming in now. We have Pannalal Sinha, who has 300 shares of JSW Energy, which was bought at 85 rupees a share. He bought the stock 2 years back and wants to know what he should do now. So he's bought 300 shares at 85 rupees each. Mayuresh, what would you recommend?
Hold on, because what has happened in terms of the long-term PPAs has shown definite signs of improvement, 69% at the end of Q3, and expected to go up to around 72, 74, with 200 megawatts of Punjab expected to get signed up. The other element in terms of their debt portion coming down significantly by 2,500 crores in the 9 months FY18, along with the reduction of receivables by 26 odd days, is a key positive. The net debt to equity stands around 1.1 time, which is also very, very commendable considering the kind of business activities that it is into. And the fourth element probably in terms of the coal linkage specifically for its plants under the Shakti scheme, whether it's Vijayanagar or the other plant, I think that should probably augur well in terms of the blended cost of imported coal actually coming down. So large element in terms of earnings parameters improving, with realizations expected to show a steady trend, along with strong balance sheet dynamics, favors the valuations and earnings profile. So yes, a clear hold from my side.
Okay, we got a caller now, and this is on a stock that we don't hear about too often, at least not for the last couple of years. Mr. R.S. Gupta is calling us from Gujarat with a question on Suzlon Energy. Mr. Gupta, go ahead. What's the question?
हाँ जी सर जी, मेरे पास सुजलान एनर्जी 600 पड़े हुए हैं 21 रुपीज के, तो 4 साल से।
ओके,
उसके बारे में हमें जानना था
कि आप होल्ड करें कि बेच दें?
नहीं, हाँ मतलब रखूं या
क्या करें?
करूं?
अच्छा, 600 शेयर है आपके पास, 21 रुपए आपकी कॉस्ट है और पिछले 4 साल से आपके पास हैं। अश्विनी, व्हाट वुड यू टेल हिम?
Well, it's at $11, so I don't think it's going anywhere. See, these bets never pay off, these 20, 15 rupees type of stocks. So it'd be much better off exiting.
Okay, much better off exiting is essentially what Ashwini is saying. We've got the final headline of the day, moving on, the fifth and the final one. Binani Cement's proposed out-of-court settlement plan has cleared another hurdle. The National Company Law Appellate Tribunal, that's the NCLAT, today refused Dalmia Bharat's plea seeking a stay on the settlement order. However, the court has allowed insolvency proceedings to continue simultaneously. Let's get some perspective on this quickly with Ashmit, who's joining in. Ashmit, how should one see this? A relief for Binani?
Well, a layered order at best coming out from the NCLAT, which is going to spark some confusion with respect to interpretation. But let me take you quickly through the broad takeaways. First up, there was an explicit application made by a subsidiary of Dalmia Bharat, where the explicit prayer was that the order that has been passed a couple of days back, the order which provides for an out-of-court settlement, that order should be done away with, should be stayed. That was the explicit prayer made. Now, the argument that had been forwarded essentially by Dalmia Bharat was that the sanctity of the IBC process must be respected, that once the insolvency application is accepted, there should be no case made, or there should be no case accepted by the NCLAT for an out-of-court settlement. But these arguments not managing to cut much ice with the NCLAT clearly providing that as far as not allowing this stay application, what it has done instead is that while it has stayed mum, it has stayed silent on its order which provides for out-of-court settlement. Simultaneously, it has also allowed for the IBC, for the resolution proceedings, to continue as per the IBC before the NCLT. So clearly at this point, the NCLT providing for both the options to the stakeholders, which to some extent could add to more confusion. But for now, the takeaway being that at least as far as that sticky point was concerned, out-of-court settlement, the NCLT remaining silent on that and not conceding to the prayers of Dalmia Bharat for issuing a stay on that particular order.
All right, Ashwin, thanks very much for that. And on that note,